So, under a new Maryland law that went into effect on September 15th, 2022, MarylandSaves will require eligible employers to establish a retirement savings plan for their employees. Do you own a business? Are you in the state of Maryland that in most cases you must comply? According to MarylandSaves, roughly 1 million people in Maryland are working full-time, but their employers don't offer a savings plan. That is about to change. I'm Colin Exelby. I'm a certified financial planner professional with over 20 years of experience providing financial planning for business owners and their families that just makes sense. I own the financial advisory practice Celestial Wealth Management and provide advice virtually to clients all over the country. Now, Maryland's program officially opened to the public September 15th. Maryland is now the 14th state that has created legislation and becomes the 6th active implementation, along with California, Illinois, Massachusetts, Oregon, and Washington. And this is just the beginning. I could easily see most states adopting something similar in coming years. So what does it mean for you? If you own a business in the state of Maryland, I am going to explain what you need to know. Now, this is a good spot for me to point out important disclosures. The information in this video, it's for educational purposes. This is not specific financial planning or investment advice. It's important that you consult with your tax advisor before implementing any investment or financial planning process. All right. If you have a for-profit or a nonprofit business operating in the state of Maryland and you have been in business for at least 2 years, you have at least one W-2 employee, you pay employees through a payroll system like ADP, Paychex, or my personal favorite, Gusto, you haven't provided a retirement savings plan in the last 2 years, and the key part, you don't currently offer your employees a retirement plan. If this is you, then you must register for the new MarylandSaves Plan or set up an alternative plan for your employees by December 31st, 2022. That doesn't give you much time. Gosh, another thing small business owners must worry about in the fourth quarter. Not only inflation, a potential recession, a business slowdown, but now this retirement plan. Well, what if you already have a retirement plan set up for your business? Do you just ignore this? Well, it's good news. If you do have a current retirement plan, you are able to opt out of the MarylandSaves Plan. But in order to opt out, you still must go through the process, effectively telling the state that you have a plan in place. That's actually an easy process and puts you in compliance so you avoid fines from the state. To opt out, you go to the MarylandSaves website, enter some basic company information, as well as an access code that the program is sending to eligible businesses. Then you simply register as exempt. Here's a little incentive. As long as you register or opt out because you have an existing plan, you will receive a waiver of the $300 annual business filing fee in Maryland. The only businesses that will not get the waiver are those that ignore this. So it's an easy way to make $300 a year. Okay, now, before you go off on the rails, if you don't have a retirement plan set up, I am here to tell you it's not that bad. In my opinion, this is actually a good thing. For many people, we need deadlines to make things happen. I know I do. Many small business owners talk about putting a retirement plan in place for employees and for themselves, but for one reason or another, life gets in the way and it gets delayed. Well, now is the chance to address this because you are now required to do something. So what is the MarylandSaves Plan? The MarylandSaves Plan is a new automatic workplace retirement and emergency savings program. Called Work-Life Accounts, Maryland is the first state to include retirement savings and emergency savings in one account. Under the law, employers with automatic payroll systems are required to establish a payroll deduction arrangement for employees through the state-run trust. This plan is set up as a Roth IRA account for individual employees. What's a Roth IRA? A Roth IRA is a retirement account where employees do not receive a deduction for contributing, but the growth over time is not taxed, nor are distributions, as long as it is used for retirement and a few rules are followed. In addition, you have access to any contributions if you need them for an emergency or whatever else without penalty or tax. That can be a huge advantage the younger you are, which is why this plan is being implemented. It's important to note, however, that Roth contribution rules do include this plan. So, if you are maxing out your other IRA contributions, you may not be able to contribute. If your household income is too high, you may not be able to contribute either. The annual maximum contribution in 2022 is $6,000 for those under 50 and $7,000 for those 50 and older. What do employers need to do? This was designed, believe it or not, to be very hands-off for the employer. Unlike other retirement plans, there are no fiduciary or required employee matching obligations. There are no record keeping or advisory or administrative fees charged to the employer. So essentially, no cost to the employer. There are administrative and asset management fees that are assessed to participants, however. So employees should be aware that the plan isn't free to them, but it's still priced attractively. As the employer, if you don't have an existing plan in place, head over to the Maryland Saves website. Register for the plan and add employee data, including payroll information. If you have a small company, you can add the data manually, and if you have a large number of employees, you can upload employee data in a batch. Once the employer adds an employee to the plan, they will receive a welcome email and then have 30 days to opt out. If they don't, the employee is automatically enrolled in the plan as long as they are over age 18. Each employee, by default, has an initial 5% deferral from their employee pay set up with automatic 1% increases up to a maximum of 10%. That's not to exceed the IRS contribution limit for the year. The point here is that studies show a large number of employees will not change the auto enrollment, and so will begin accumulating savings automatically. The employee does have the ability to change the deferral up or down or eliminate it completely, but they will have to manually do it on their own, not the employer. The employee also chooses the investment options and can withdraw the funds if they choose. All right, say the account is set up. Where does the money go when it gets contributed? When payroll deferrals are made, funds are placed into an emergency savings account until the balance reaches $1,000. It is 100% invested into a guaranteed investment contract issued by Lincoln National Life. After the emergency savings account is funded, all $1,000, contributions will be then invested into an age-appropriate target date fund or other options that can be chosen by the employee. So in this plan, with minimal effort from the employer as well as the employee can start accumulating a savings account for emergencies as well as a retirement account. Sounds like a good thing. Okay, now that you know the details and the limitations of this plan, what if this is the little nudge that you need to look into setting up your own company plan? There are a number of great options out there that can be implemented in cost-effective ways to save for retirement and get some great tax incentives. A custom plan may allow for both traditional and Roth contribution options. The contribution limits may be much higher. You may want to offer a matching component as a way to give employees a bonus or attract talent. You may want to share profit sharing with your employees. You may want a more robust suite of investment options. There are a lot of choices, but go slow. Design a plan that works for you and don't rush into anything. The only deadline is that something must be done by December 31st of this year. For most companies without a plan, the Maryland Saves option may be the best choice for now, while you decide if you want to implement something else. Look, I work with business owners around the country every day on the best ways to structure a retirement plan to maximize the benefits of both the employer and the employee. If you would like to discuss your situation further and what retirement plan may make the best sense for your business, feel free to reach out to me on my website at celestialwm.com. Just hit that contact button and send me a message. What about employers in other states outside of Maryland? As these mandates continue to roll out over the next couple of years, it's important for small businesses to keep an eye on deadlines, rules, and regulations to avoid penalties. And if you do run a business, make sure you check out these videos next to supercharge your financial future.